Life throws lots of surprises at you. It's usually when you've hit a financial valley, when you realize the importance of setting aside cash for unforeseen occurrences. An emergency fund is an account set aside to gather money for emergency use. Conventional wisdom says to save for 3 to 6 months worth of your daily expenses, though others suggest more, especially during periods of economic uncertainty. If you lack an emergency fund, there are other options, including credit cards, payday loans, pawn shop loans, or loans from family and friends. Each of these options has its own drawbacks. Though credit will do the job just as well as cash in your savings account, it comes with expensive strings attached. Interest on credit cards adds up over time, so you end up paying off a higher bill. Credit card companies may slap extra fees or higher rates if you exceed your limit or forget to pay your bill, adding to the overall cost. You should know your spending and earning habits well enough to decide how large of an emergency fund you're going to need. If your income is not stable, which is true for many self-employed people, you may need a larger fund than someone with a steady paycheck. Begin by determining how much money you spend in a month, including housing, utilities, transportation, gas, insurance, food, and loans. Since a loss of income earning ability will mean cutting out unnecessary expenses, focus on the necessary ones. Once you have your total dollar amount, multiply it by the number of months you think you'll need. With this goal in mind, determine a manageable amount to sock away each month or week. Don't be discouraged if the amount you need to save seems impossibly large. You can begin by saving a small amount. Ideally, you want to store your emergency cushion in a savings or money market account. Both of these are liquid, easily accessible, and don't lose their value. Not all accounts are suitable for emergency funds. Retirement accounts, for example, should not be touched because you'll jeopardize future growth potential. Credit cards can end up costing you much more in finance charges than you need to cover your emergency expense. Some people choose stocks or other market-based investments for their emergency funds. Remember that the volatility of the market may put you at a disadvantage. You may end up with less than you put in. Treat your emergency fund like any other bill. This will give it a sense of priority. If you get a bonus or raise, put all or most of it into your fund. Apply your annual tax refund to boost your savings. If your tax refund is quite large, adjust your tax withholding so that less is withheld each month. Stay financially fit, friends.